Yo, what is good, High TF Mob? It is your boy AB, aka Booba, or as most of you may know me by, Booba. Back with another video, and today we are going to go over not only the Friday review of last week, but this week's Sunday analysis. So again, as you all know, I generally try to get my Friday, Sunday posts as consistent as I can. If I don't have time to get around to it Sunday, or excuse me, if I don't have time to get to my Friday market overview or market review, I generally post both on my analysis days. So the market's already open. I actually decided to do the recording a little bit later when the market was more active. Seeing as like most of my lines and adjustments from the high frame, there isn't much adjustments from any of the movement that has been going on so far. So we're kind of just playing everything by ear still. I did have some pretty good setups on. It was AU, no, excuse me, and AU. I think UJ also had a couple nice moves in there as well. But for the most part, I didn't catch every single move that you guys are seeing here, but these are all the moves that I did end up taking after the last week's breakdown and everything. So starting from the top down here, we'll start off with AU. We can see here I did have a buy idea from the beginning. You guys do remember me breaking this down, saying that this was a pullback. Price was at a discount, and we were looking for that potential buy in this zone. So as you can see, price did break out of this previous high here, came down or retested, and then you would have found your entry down in that 1 hour here, where there was a bullish engulfing pattern. And then, like I said, we had the fib retracement. So this was our leg here that we were measuring. And once price got down into the zone, we knew we were looking for buys to correlate with the higher frame. And then I personally didn't get into this. I didn't actually think the markets were going to pop off as immediate as they were. But as a matter of fact, I have been watching a bunch of, what's his name, FXLXG. This is his channel right here. And this dude has a bunch of like different, I would recommend if you guys like want to watch successful traders as well that have also done, you know, crazy milestones in the industry. He goes and does a lot of podcasts with them, but he has this little saying that he goes by, it's set it and forget it. And honestly, it's funny that he says it because it's like, that's the one thing that I, till now as a 4-year trader going on 5, have been struggling with, is setting my trades and forgetting them. Because most times you can see, like, I'll take a loss here. This went in favor, but if I would have set and forget, like I would have had my stops at break even at some point after seeing price go in my favor. But the idea is that you take your trades. If you get the ability to put them at break even, you put them there, and then you just leave them alone. So had I done that, as you can see, I would have had a full 3% to kick off the week. But I didn't get into there, and then I was looking for that sell opportunity. So when price started to fall back into this range, I started to think that, okay, price is going to come to retest this zone, and then we'll get the sell. I thought this was the retest because there was something that I'm doing here with these blue lines that helps me kind of figure out what side price wants to lean towards for the higher frames, and helps me find kind of like intraday moves and setups a little bit easier. And basically what I do is, if price is, let's say, playing around in this zone, right? Okay. Price is coming into this zone and I'm on my hourly frame. What I like to do is I like to mark, being down on the 15-minute, I like to mark where the potential test and take profit zones could be. So if I'm looking at this situation, the retest could be at this high, right? My blue line could be up here too. It's probably only down here because it already went up one time. So we'll just play it. So it probably already went up and then created a high. Yeah, so that was where the low high was. So for me on the 15-minute, that's one potential zone from this area that price could come to test. This is a potential TP zone that price could come down to hit coming from this area. And then this is the second TP zone, or third, you know, whatever you want to label it as, if you're going 1, 2, 3. So basically what I'm doing is I'm trapping price down onto those frames to essentially determine if price is falling within this middle line. If price starts to fall on the bottom side or fall to the downside, then I know it's starting to downtrend on the higher frame. If it starts to fall above this middle line, I know price is starting to move with the uptrend with the higher frame. So I'm going to give better examples of this. It's just kind of the idea of me having those there, just so that people aren't kind of questioning, like, what is that for, you know? But as you can see here, like price broke through, then didn't break this line, but came close, came back up, looked like it wanted to retest this high. It gave you the rejection. You could have got in there, set and forget. Now you can see price double bottom off here, but still created the low high. So continued and then finally broke through. So for me, I looked for this entry here, right? And what's interesting is we had the impulse start back up here. And from this impulse, we had price begin to break its structure. So generally when price leaves a supply zone, which is up here, okay, I guess we could just put a box around it. So price left a supply zone, which meant that for a brief period of time, wow, that's not even what I wanted to do. It's not even what I wanted to do. Relax, relax. We'll just do this to kind of keep it simple, but all right. Within this range, you're able to see price went sideways. Okay, this is a consolidation zone. When price broke out, right? Price started to go to the downside. This is essentially the first leg for your 1 hour. So you probably had some impulsive candles on your 1 hour, right? And since price left this consolidation zone, you could have waited for your reentry back up here where price left your supply zone. So basically, it's kind of like a short-term setup, or, you know, a intraday setup by waiting, because once you're down here at this point, you know price is exhausted. Once you're down here, price is sold off with one push, consolidated, pushed again, and you know it's exhausted. And to sell right here was basically bait. So I would have had to wait for a valid retest at least around this high before I got back in. But as you can see here, I got in a little early because at the time it looked like it was ready to go around here. So, you know, it happens. It's trading. It's how it goes. This is the business. You get used to it and just learn to understand why those situations are happening. So the only reason why I came back up to here was because this was where the actual initial supply zone was. Price came back and then institutions stepped in. And when they stepped in, they went down heavy. So once they stepped in, you've seen the break of structure because they had the reversal happen. They collected money within the pools, right? And now they took off. So boom. Now, once they respected this bottom part, so I got in early. If I would have gotten here, that would have been the setup. But patience is key, and that's about it. So right down here, we're looking at price playing off our bottom weekly, our weekly low of the previous week, and this is where price bounced. So as you can see right here, so check this out. Price buys up, right? Okay, kind of goes to retest the zone it left again. And then now it kind of looks like when price came back down, it retested this demand zone. Okay, so this was kind of your demand zone here. Boom. Okay. And then you had the breakout retest. So you can just kind of get some detail. I know I have a ton of lines here. And honestly, the only reason why I have this many lines and I'm comfortable like this is just because I understand what every line is for, what it means. It's probably very confusing for anyone that's just looking at this. But boom. Okay, so it respected right here. Right when it created this low, this was one leg, created this low, this lower high, but then it created a higher low. This could have been a valid buy setup down here. Okay. The only reason why I even put another buy setup up here was because, again, with my blue line trick, I have it where now price is falling above the middle line, right? It's closing above, closing above, closing above, respecting still. And now I know price is leaning to the buy side. Okay, so if it broke out this top side, it's the same concept. Same concept. It broke out of it. This would have been the retest. You could have gotten there. it just would have been a later entry. So this is why I do the 3-line setup, because it helps me know when price is leaning to one side or not. But again, I'll give some cleaner examples. That looks really scruffy, but this was just a great bull flag. And the only reason why that was a bull flag is because, again, we needed price to basically breathe. The daily was still wanting to continue higher, and there's a lot more liquidity left back up here that price needs to collect. So this week, we could definitely say that it's valid that AU could still be a buyer's week. We just have to see how this initial candle, this initial candle wants to start off for the week, and then we'll go from there. So with that, we'll clear this up real quick. And again, please feel free to fire away questions in the comment section. I definitely would like feedback as far as the breakdown. If you guys want me to do a different approach, if you guys want more clarification on what I'm using on my screen, all that stuff, just definitely let me know, because I won't be opposed to it. And honestly, teaching only will make me better. So that's a big reason why I'm doing this, is to help not only improve everyone else's trade game, but improve my own, and also improve the trust that I have with what I do know. So, all right. I cleared all that off. We're going to take off all of our weekly lines here. Our peak weekly lines, we're going to exit. Okay, this is where price currently is at. Let's erase this. Okay. So now we got some clean charts. Ooh, wait a minute. Got to keep that. Okay. Got some clean charts. And again, I always like to start top down. So as we know, the new month is about to begin. Okay, so we got to keep that in mind. All right. It's not because we're trying to look for the whole, monthly move, or as far as, it's not the monthly move we're worried about. We know what the structure is because we have the lines laid out for it, but it's mainly for the candle. So looking at how this candle is currently, what this month has done so far is we have started off with the buy for the month. Price then threw some very strong sells all month. And now towards the end of the month here, we got a lot of buyers that stepped in, okay, to push the market back up. So we see this price point where it looks like it's almost like an indecision candle. So it's safe to say by the end of July, okay, we have a solid week left of this month, 7 days, okay? And in 7 days, it's safe to say, let's check the weekly based off how this looks. We have a bullish engulfing here. And by the end of this week, it's very likely we can see more bullish presence. If this weekly candle, as we can see, it started off by opening like this. If this weekend candle, God, I can't talk right now. But if this weekly candle fails to break this high here, this tells me that it's still a seller's incentive market. Okay. And the reason why I'm saying that is because that's the first motion or direction we tried to go. As you can see, it's just by a little bit, right? It bought just a tiny bit, and so far we've been selling. Okay. So remember that the top of the week is generally the fake out move, where like last week we had the sell to start off our week, and then it bought all week, and then now we had the selling towards the end of the week. Now our week is starting off. What does the price like to do? Generally throw a fake move. If by the end of 7 days, this candle is going to print, I would assume it's probably going to be in favor if it's still trying to trend upwards. If not, it'll be engulfing, okay? And if it's engulfing by the end of this week, it'll look a little something like this. Okay. A little something like, oh my God. I don't even know if I could draw on that like that. It'd be cool if I could. Let me see. They're not having that. They're not having it. All right. That's super weird, but okay. But yeah, it could be engulfing, right? Or it could be closing like this. Okay. So our job is to figure out what's happening as the false move for the week. And if my bet's going towards this being a bye week, then I'm going to assume we're going to get some buying presence, which means this candle will probably look it'll probably look like a bullish candle with just a very strong bull wick, or wick to the downside. So it'll probably look something like this by the end of the month. Boom, 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 like so. Okay, it's not letting me actually draw that in like that, but you get the idea. So right here, the opposite way it could look is like some type of movement makes a drastic push down, some volume goes crazy, and then the contracts are still trying to fill to the downside. That's the only other way I could see it as far as us getting down to these TP levels to collect contracts. So it'd take then another like two to 3 months to get down here. But we're, again, that's not the outlooks. That's really not the importance of the monthly, because the monthly is 30 days of time. We're really trying to just dissect the candle to understand motion and why things are happening the way they are. So right here, I'm gonna drop to the daily. Okay, and we have price in this channel coming down like so. So price breaks out the channel, and then price looks like it retested. So this is our current low. Price created this high, and on the daily, it looks like price is about to break its previous low, which means it might break structure to start going back down. Okay, that's one trade idea right there. But if we want to get it really sharp to understand what's going on, we're gonna set up our peak weekly high of last week's candle. Oops, wrong one. So weekly candle high, weekly candle low. Okay, so last week's candle for the peak weekly low is down here. Last week's candle, the peak weekly high was in this zone. Okay, our current week, this is where we are. Okay, and again, what I always love to do with these is trap the very tip of the weekly peak right here, and then same with the bottom. Is trap one in on the end. So we know if price closes above this side, it's definitive that yes, we're going up. And if it closes under this, it's definitive that yes, we're going down. Because it's lined up to where it needs to break for that candle to start turning. So now that we know that, we see our TP zones for our daily, okay? And we do see prices dying out. Now we can drop to our 4 hour. Now we'll drop to our 1 hour. We'll go ahead and mark our anchors. So our swing low is right here. Okay. Swing high. It's up here. Okay. Now price is in a pullback right now. So it's in a downtrend based off of what we're looking at on the 1 hour. Okay. So a good way for me to always know I'm at my anchors is just to check my leg of the 4 hour, because that's generally where you'll find your anchor points on your 1 hour for the trend to continue. So that matches up right. And now if I come down to the 15-minute, get down to the liquidity zones. So basically where price will be heading if we move one way over another. Okay, so yeah, liquidity zones here. So remember, these are always our targets. This is where our ideal take profit zones will be at. Okay, yeah, nice horizontal zones where price is moving sideways. Boom. Okay. Now I'll look to my left, look for the same thing. I'm gonna actually go up one frame because it's a lot more noise down here. Let's see. So I can simply, mark this and say this is an entire zone. That's no problem. Okay. But I'm one of those traders that likes to keep things pretty specific, or at least I like to keep a lot of my lines horizontal so that it's easier for me to read price off of where it's going. Because I know if it's leaning on one side, it's favored to go towards that side. But let's see. So yeah, like I could definitely go ahead and just mark like the small zones, knowing like, okay, this is definitely a liquidity zone. Okay, we just know that was just a bull flag, so price broke out of it. So yes, and yes, this would technically be liquidity. You could definitely say, oh, that's collected contracts, market manipulation. So money left this zone. This has been vicious. Okay. Nice little demand zone down here. Yeah, and then of course you can mark this. Okay. Boom. All right. So yeah, basically these are targets. These are all valid pools of money that are left behind. We know this is where our current swing low is. If I'm watching the daily and I wanted to know whether that's going to continue lower, I know the daily, the 4-hour has to break its structure. So this is its first sign of a potential break of structure because price was following the trend structure of an uptrend, right? So we can mark that here, and we'll obviously see here we have our low, well, excuse me, we have our low down here. We have the high right here. Okay. This was the high low that was created off this wick. Create this new high here. This is your new high low right here. Respects your previous low down here. This is your new high, right? We have our current high here. And when price is doing what? Coming back up to retest anywhere in this zone. It could be that high, it could be up to here, right? And then it could potentially drop and then continue lower. Okay. So in the meantime, if it's me, right, like I like to swing again. I like to find the long-term setups. I would probably wait to see if this will confirm for favoritism towards that weekly candle. But at the same time, I don't know. The daily looks like it wants to pivot. So this is kind of one of those ones I won't mess around with too soon. I'll give it more time. Because if you can't tell a definitive buy or sell, just leave it alone. Let price play out and let it paint a more clear picture. But yeah, if you were scalping, you could easily probably find like a nice little setup within this potential pullback that's coming up. But I would personally wait for a double tap down at the swing low. So I'd wait for price to drop again. If it respects one more time, then you know there's a potential buy there. If it doesn't, it's not even worth trying to buy because then you're gonna basically fall into a trap. So we'll move on to GU. We'll do the review here. So and kind of just take it down to the hour, and then we can just kind of backtrack here. Okay, so kind of like AU, GU also had the buys that popped off right away, but except this then started to consolidate pretty heavily after the buy, and it didn't actually break our previous weekly highs level at all. It just kind of bounced off, collected pools, then they whipped down to the downside, and then as they're consolidating here, there was a setup I saw because at the time I was actually at the market. I was actually about to head to sleep at Asia session, and I had seen. Oh, and by the way, this was one of the trades that I got at break even. I didn't lose this one. It went in my favor, and then I just expected that it would retest rather than go that far down, but it ended up coming down and wiping out everything, which happened. So it's okay. But yeah, at night I seen this setup where price came up and bought from this. So you can see here, if I zoom in, we have a swing low here, our swing high here. Price was coming up towards our swing high, had broke out just a bit, but tested this previous high. And I also knew it was testing the peak of my hourly, right? So my hourly line here, I don't know why it's actually right here. It's kind of weird. I think I chose it there because of this, but ideally I would put it here because the reason why is if, oh yeah, wait, hold up. It would be like right here, okay? And the reason why is because if I'm looking at my hourly and price from relative to where it is, were to be moving up, excuse me, because I did not see this leg at the time. It looked like that. So if I'm looking at this right here, I'm marking up this as a potential take profit because this is where price is. This is a level, a mid-level to where price is. And this is the top side peak that price could then retest. Okay. So for me, I'm thinking if price comes up here and hits this line but doesn't break it, it's a valid sell setup, no matter what, really. Just take it at the time. But as it started to play out, okay, I took the sell setup right there. Okay. I took the sell setup around this time, right when this one popped up. Okay. And price continued to go against me, and I had a very tight entry, which, like, if I were to shift this up here, you'll see this same exact box that's like this was back here. So I seen this come against it, and keep in mind I have 1%. So I'm like, do I want to lose 250 on such a small move like that? And sure enough, I closed it early, right? And if I would have just left it alone, look what would have happened. Quick 750. A real quick 750. And granted, like, I would have probably been up and awake. Like, imagine if I was up and awake and seen this up and awake, and I would have messed with something. I probably could have messed up that bag still, right? Because they came back and grabbed most of the money out of there. People would have panicked and be like, oh, it's going to reverse because it didn't break this line like it needed to. Well, wrong. It still respected that previous high, which means it was still valid to continue lower. So just whip down. And then it was just a nice little pocket move that I could have got, but instead I missed it. And then I had to end up waking up just seeing that movement happened. So of course, once price got down here, it respected everything and then created that double bottom. And that's where price took off to the upside to match up with the 4 hour here. Because at this point, you can now see 4 hours just consolidating. Okay. And then we can see here on the daily, price really was just trying to go up. Okay. So those were my two setups on that pair for that Friday or for that last week. And now we'll just clean this off and then break this down real quick. And I'm going to be taking my time a little bit more on this analysis just so that I'm actually like covering a lot more as far as questions that may be, popping up throughout the chat about this stuff. So also something pretty neat about the swing low anchor point and swing high anchor point. If I want to put y'all on with something, it's this for sure. If you have the ability to set alerts on TradingView, set alerts for once per bar close on your swing low and your swing high, and set the notification so that if it were to close on those lines, you say 1 hour crossing swing low, like so. And then like this one up here, you do the same thing and add an alert. Once per bar close. And the reason why you're doing it on the bar close is because it doesn't matter. Like nothing really matters until you get a definitive close over your structure. Okay. Crossing. Okay. Wow. So yeah, nothing really matters until price closes under or above these lines. So that's why I set that, so that I know if I get that alert that a move is generally ready to happen. Okay. So now if I go to, okay, let's go, hold on, let me check something real quick. Let's do this real quick. So we know this is the direction of our market right now. So I'm going to set this up. So again, if price is up here, we know it's at a premium. If price is down low, it's at a discount. Okay, so we'll go to G. Go up to our weekly. We're going to make this adjustment on the line. Okay, stress this out. I'm going to take out these other points of interest real quick. Boom. All right, and then we'll readjust. So like so. Same thing with this, readjust. Boom. So now we know where our previous, weekly candles peak, high, and low are, which means we know where we are relative to the week, which should help us understand where we're going by the end of the week. So now, if I go down to my 4 hour, the only reason why I'm like looking at this daily, the pausing on the daily frames, is because I'm looking to see if I should readjust my TP1 levels and my TP2, TP3 levels, just to kind of keep things more concise. But I'll keep them how they are for now, because again, I like to reset those lines at the beginning of new months. So that's if they need to be reset. But based off this, we got our 4 hour. We go down to our 1 hour for our anchor points. You know, our swing high currently is here. Our swing low, the low that caused that high, is currently right here. Okay. You can, as you can see, you already see my alerts are on these lines. They were on my other chart, but just deleted them, so it's not good. Cancel. Okay. So yeah, this is the situation. We know price left this point of or this demand zone here. Okay. And the reason why this is a demand zone is because price range created liquidity, consolidated, right? Moved sideways, then broke out impulsively, strong impulse. So this is telling us the direction of the market, and now we have the rejection happening right now. Actually, this is a valid buy setup. Okay, this is a very valid buy setup. So with this, we know price came back to the liquidity pool, and they grabbed and mitigated their position. So I'm looking at this. Okay. This is what I would be doing right now. Okay. Take this to the upside. See the stop. So you see this leg right here. I put my stop loss just under here. Okay. Cool. All right. So that's a valid 3-to-1 setup. We'll wait because it looks like on the 15-minute prices trying to rise, and price hasn't broken structure yet. So we had price trending down. This is the new low that's created on the 15-minute. It created just this first high. So price has to come down and test this. So now I can drop to the 5-minute. Now I know I can add some points of interest from the breakout of that liquidity zone. So price was moving sideways here, breaks out, comes and creates this test. What was the last down candle before the up move, which was this one? Okay, and I guess it's just a real rise block. Okay, so this is the last down candle before the up move that led to the whole trend reversing. Okay. That's one. There's another one. You can either say, here's another one too. Okay. And then you can just wait for price to kind of come test or tap this zone. Have a tighter entry. Okay. So you could play it both ways. You can play the soft entry, which is the initial way I just showed you guys, which is by looking back to the previous area that price needs to respect in order for this to be a valid buy. Or you can put the aggressive entry where you're watching the small frames and it's lined up with the big frames for you to be able to, for you to be able to capitalize on a full, just on a larger percentage. But I'm not gonna lie, I'm actually looking to get in on that. So I'm gonna keep an eye on that all night. Guys, all night. I'm gonna keep an eye on that up until it looks good. Looks good to let go. Yeah, because we're in a zone too where price can fall just as easily as it can buy. So we see the bullish engulfing off the weekly, but we don't know how much volume or momentum is going into that just yet. Going to the daily, the structure has broke, right? Because we had our low created here. This was our high, and this is our new high low, which is these wicks. Okay. And then price at the current off this current daily has already tried buying, but hasn't bought up a lot, and now is trying to sell. Hasn't really sold so much just yet. So this 4-hour candle trying to rise, we can see this breaker structure happening, or at least beginning to happen. So I want to see at least 2 taps down here before I get involved. Next. So this was the killer setup of last week. Oh my God. Some straight heat. Like I could have actually like passed my test off of these setups, man. Like no cap. The amount of pips, let's even see how much pips could have been collected if, because this was actually one of those setups I did end up closing because of after seeing the other 2 setups get stopped at break even. I was like, this is probably going to do the same. So here, this was a 219 pip move. Great move from my entry, at least 219 pip. If I'm looking at the sell setups, hold on, this was a cool 117 pips. And this was another 100 pips. That could have been 417 to like 440 pips collected off just AJ alone. So this was just a great, oh my God, this pair went perfect. Like what? All right, we can kind of trail it back. Let's take it back. So we knew our previous weekly, like I always set up, previous weekly high, previous weekly candle low. We saw that it broke over once this candle closed above, right? That was our close. We had the price try to buy above. We knew it started coming back down and then close, right? With some sellers momentum, came down, tested our line after breaking out. So we would have known right here, this was our buy, right? But that was why I got in early, because this looked like consolidation already. So I was like, all right, this is kind of consolidating. It's respecting this level. As long as it respects this, I'm okay to get in now. That's just kind of how I saw that setup. It took off. And mind you, I overshot my target. So by that, what I mean is once I was in this trade and it started taking off, I knew based off where I put my take profit, this is the type of take profit where it'll take maybe 2-3 weeks before it actually really does hit that, right? So if I would have tightened up this move a lot more and maybe had my stops like down here, right, I could have got this trade done a lot sooner and tightened it up. Okay, maybe even gone for like these take profits back here, right? But I overshot it, which is okay. It happens as a swing trader. Sometimes you just see like the larger picture. And what I was seeing was just this. Like I was seeing price go from here straight all the way up, right? Just some crazy move, which that's a lot of pips. 217 to happen in that same week was already a lot on one pair. Generally, from what I've told, charts generally move 1,000 pips a day, is what I was told. So yeah, 217 collected is not bad at all. And then of course this was the other 100 or so giving off in the other direction. So once price peaked out, I seen price start kind of selling off. And once I seen the sell setup here, there was just so much room to the downside that at this point I started marking the 3 lines on the 1 hour, right? So I'm like, I know price is overbought. I'm like, there's no way I'm going to buy it back in unless price somehow manages to respect this midline, right? And then stays above, and then I can look for those buys. And this is why I love this 3 blue line setup, because look, I had 1 blue line set up for this high. I had my midline set up for mainly this consolidation level that was respected. Okay. And it could be a vague blue line. It doesn't need to be anywhere specific. Of course, it always helps to put it at the ends of the wicks, because then you're able to know when price closes under, that's a definitive reason to be getting in. But I just kind of paraphrase my lines here, because when I let price play out a little bit, you'll kind of see here. Hold on. See? So this was like the mid-level. This was like the new peak. And then of course, this take profit or this bottom line is for here, right? So now if I'm trapping those 3 sides, it's like a teeter-totter to me. So price started falling in. This is where I should have took my initial sell setup. And again, set it and forget it. Set it and forget it. So I'm gonna trade by that all week. Like all week, every trade I place is gonna be well calculated, and it's gonna be a set and forget setup. But if I would have did that for this would have played out. But sadly and unfortunately, I hesitated. I got afraid, didn't get into it because I seen this buy happening. And then I was like, let me get out because it don't seem like it's right. Yada, yada. Sure enough. Or was it this one? It was this buy. Yeah, it was like this. It went in my favor, then went back against me. Once it closed above, that's when I got out, because I was like, oh, it's respecting this. Let me get out. I don't trust it no more. But again, once you have the outlook, it's basically like you got in because of the market structure. That's why. So don't lose sight of that. So right here, price is still respecting under the line, still respecting. And then on Friday, I believe in the morning is when I saw this setup still lingering around here. And I was like, oh, it's definitely selling. I was like, if it's been down here this long and it hasn't bought up, it's definitely coming down. So at that point, I was like, let me find the proper entry. I seen it right here when this low high happened and bounced right off this line. I got in. I saw price start coming against me, and I'm like, oh, dude, I'm gonna leave alone, turn off my phone. And then sure enough, I look back, price starts going crazy, going in my favor. At this point, I'm nervous about this bottom line, because I'm like, if it doesn't break that, I'm out of here. And it broke it just fine. So at that point, I knew I was set. I put this at break even, and then right around like down in this level, you'll see price gets really close to TP. And I was so tempted to be like, let me just close it right here. But then I was like, never mind, let's let it go. It's TP. So every bit of what I was just narrating was literally how my mind was processing through that entire trade setup. And that was throughout the span of a week. Okay. So imagine holding trades for 2-3 weeks as swing traders, like, and what runs through their mind. You just got to sit on it, man. Sit on your hands. So that was a great finish for the week, because it put my 25K account in a standing where I'm able to actually continue to stack onto it and whatnot. So right now, we're gonna tear this down. Okay, boom, boom. Take off our 3 blue lines. These I could always add later. I add those for fun, honestly. There isn't a name behind those. I'll probably come up with a name for them later, but it's just what I use to kind of quickly identify the key areas in the zone that I deal with. Man, that was a crazy setup. All right. Take all these out. Ooh, wait a minute. That, okay. Yeah. So we'll go back up to the weekly. Okay. Oof. So check this out. Just all this buying, and then completely sellers just take right back over by the end of the week. Like it's nothing, right? Now, if price were to respect this peak low that was set, and the trend continues. But if price this week decides to fall under this line, well, it's game time. It is game time because now we know we can at least take the sells down to this wick and maybe down to this TP1 level. So we'll wait that out for sure. It might even come down as far as this leg here, and if it respects this, we might get another buy up. Okay, so it's always important to get the bigger picture because you want to know why the market may do other moves besides what you're seeing. Okay, so I'm looking at this right now. We drop to our, let's delete this right quick. I think I could take this off. Wow, yeah. Mm-hmm. Mm-hmm. Okay. Okay, bet. So now this holds on its liquidity, mainly marking it so that I can see if, like, let's say I go up to my daily, we just know that was a pivot zone, and we know that was a consolidation zone that was broken out of, and then this could potentially be a retest zone or a flip zone later. Okay, so I'm just marking that as wide frame liquidity. You don't have to. It's up to you guys, and what helps you guys see things clear. So always, take things with a grain of salt as far as how I'm going about it, because the small tweaks that I do on a week to week basis are generally happening because the condition is just different. So, but it will never be anything like outside of any of the basic fundamentals that I'm teaching here on the channel. So here we'll go to once per bar close, 1 hour crossing, swing low. If you get that alert to your phone, you'll get an email, you'll get a text message app or an app notification. And it'll just tell you like, hey, like look at your charts. The breakout just happened for your swing low. It's potential we're going one way over the other. Simple as that. Okay, so right here, my swing high is going to be right here. As a matter of fact, that might be cap. Let me see something. Because what was the high that led to this low right here breaking? The high that led to this low breaking was this high. So this high would be your swing high. Once this low broke, the swing high set this peak swing low. Okay. And then it came up, broke it, and made this swing low. So if I go to my 4 hour, I better be seeing some wick right here that I can, yep. Right here. That's the one. Okay. It's weird, but we'll take it. Okay. So that was a swing high down for your 1 hour. Led to your frame pretty much continuing the trend. Okay, so now we know if price breaks back above this and test the top, we're coming back up for a retest. If it stays under the swing high, we know we're gonna keep looking for some sells. I'm just trying to get this as straight as possible, yo. There we go. Chilling. Okay. Wow. So now that we got that, I don't know why these are all like slanted by hair. There we go. Yep. So we'll just wait that out and just see what happens. As far as the fib on that, that's also a big reason why I do want to put my swing high back up here. We'll keep it here for now. We'll keep it here for now. We'll see what the alerts do. This is again one of those tough spots that you just really don't want to mess with too much until something is certain. So since we know we're in the favor of the downtrend right now, what I always like to do is find my points of interest that are pushing price down. The points of interest for this would be right here. Okay, the last up candle before the down move that led to the low breaking, which is this one. And if I put my real rise block here, label that, we just wait. And if price were to come here and respect, then I'm looking for that sell continuation. If price doesn't do that, then I'll be expecting that to happen up here. Okay. So right here, last up candle led to the down move. Boom, boom, boom. All right. And then we got one more back up here. Okay. So those are the potential 3 spots that I could see price pull back to before the sell down. So if it comes up, test here, we'll take the sell. Test here, I'll take the sell. If it tests there, I'll take it. Then if it breaks through all 3, then we know where we're going. It's back to the upside. Okay. And again, at that point, I'll just be looking for buys that line up with, the buys that line up with this candle turning around. So you got to keep in mind the timing is still a factor. All that stuff is still there. None of that's changed. Just based off this momentum of this candle here, I don't expect there to really be that much pulling back. But it seems like it's already has tried to do its sell motion for the day. Yeah, keep in mind this candle is going to move for 24 hours. So this candle's only been moving for 6 hours, and within 6 hours, it is not only bought one way, but it's also sold down, and now it's pulling back up. So it's just fluctuating for now, and it might just keep ranging. And then once it creates a larger range, then we might be able to determine what's going on. For now though, that's a hot trade setup to be messing with. So here's GJ. GJ has been, man, it's been interesting. It's been a rocky ride, but it's also been crystal clear at the same time. So like everything here as I look at it just makes sense, right? So here we had the break of structure happen on our 4 hour, which led, we can drop to our 1 hour. We had the sells, right? Price ranges here, creates another sell setup, ranges here, creates another sell setup, pulls back, retests, ranges, I think it's another potential sell setup. Buys against me, takes the hit out. Price ranges, breaks to the upside. I get in a little too early off this buy candle here. I'm thinking, remember, first impulse is never really the impulse that's going to lead to your setup playing out. It's always that second, it's always that retest that's going to lead to the move playing. So first impulse is the sign that the trade will actually start going your way. Always remember that. The first impulse is always a sign that the trade will start going your way. The first impulse is always a sign that your trade will start going that way, right? Because you have the pullback still. So somebody could have sold here, over leverage heavy, wiped out, and then they're going to go. And they only went that much further. Then they came back and did it again, then went. So with this, I was in this setup at first. When I got in, price looked like this. So this is exactly what it looked like, right? And I'm like, man, it's not developed enough. Like even me, I knew, I was like, this doesn't look developed enough, but I know it's consolidating. So I'm going to go with structure. I'm going to set it, forget it, whatever. As I look back at the chart, price is back up against me like this. And I'm like, man, this is exactly what I saw. This is a prime example of set and forget right here. Because if I would have set and forget, okay, I wouldn't have been here to really even see this. And even if I was and I followed that rule, do you see that? Do you see how that could have easily messed up the most beginner traders? This could have been a fire signal for Friday. And I would have had maybe a 4 or 5% close for the week. Right. But because I hesitated and didn't think that was going to play out, well, guess what? Here we are now. Right. So it's okay. This is what happens. And honestly, I love when it does happen because it's just that constant reminder that you just got to leave things alone. You just got to let it play out. Okay. And especially as beginners, you need that sting every time for real, because it won't really click for you that, hey, I'm messing my own stuff up until later on. So Price played a beautiful structure. You can honestly even see like this was just a blatant head and shoulders. For me, a lot of what determines whether I get into a pattern or not is really just where it's happening. Because for me, it has to make sense with the high frames as well if I'm going to mess with it. What just happened? Well, that is not what was supposed to happen, but yeah. You can just see that's just, it's not a beautiful, not picture perfect, but it's a head and shoulders still. It's definitely there. Also, even a triple top, you can consider it to be. But yeah, so that played out flawlessly. It also came down to me trusting whether that weekly was really just going to start going down or not at this time. Because again, I'm still looking at it as these have to buy. Okay. So keep in mind, if I'm an investor, all that's happening while price is going against me right now, like if I'm looking at this, it's like I'm trying to buy long term. All this means to me as an investor, this selling is, hey, it's at a discount. Buy some more. Let's buy some more. It's at a lower price. Let's buy some more. So as an investor, that's how they're thinking. This dip doesn't matter to them. As a scalper or like an intraday trader or retail traders, this hurts us. We look at this as like, man, we fucked up. We missed a big move. Yada yada. No, like you didn't really miss anything. It's just setting up more opportunities for the bigger picture. Okay. That's how you have to keep it in mind. So if the opportunities on the low frame are presenting themselves to set up for more opportunities for the high frame, get involved with those low opportunities if you're a scalper. And again, make sure your risk reward's great. So we're going to go through, we're going to clean up this pair and we're going to go ahead and break it down. I'm going to go ahead and go crazy right quick. We're going to take all these off. These were actually from a couple weeks ago, but just seeing that, like, man, the repetition in the craft, how it just happens over and over. I love to just show the examples because, man, y'all are following me like week to week. Like since May, you guys haven't seen. I mean, granted there are some moves I've taken that you guys haven't seen yet, but just know for the majority of like my markups, like the meat of everything, you guys are seeing me do it right here, right now. This is all I do. This is the meat of everything. So even when I'm off camera, the same way I'm setting my lines up and adjusting and finding my entries, it's all the same. Oh my God, I just messed something up. Messed a lot of stuff up. Okay. I guess, let me try this. Okay. Let's go back. So all I'm gonna do is readjust these, okay, to the new week. Or the new previous week, I should say. Okay, that's our daily open. We're gonna take that off real quick. All right, I gotta keep using my daily open line. I love that thing. It's amazing. All right. It's just because I'm honestly, again, I'm a naked, like I like to look at price naked. It's just what helps me, especially with my psychology. I don't like having a lot of stuff on my screen that could tell me anything otherwise from what I'm seeing in the pure information, because it just makes things so much more confusing. So again, off the previous week, right? If price is going to keep selling, it needs to close under 163 flat. Okay. It needs to close under 163 flat. If it closes above 163 .155 and stays above that, we know we're still buying. We're still looking for buys. Okay. If I go down to my daily, I'm going to take off my real rise blocks because I don't need those right now. The points of interest or my institutional blocks. Okay, now we'll drop to the 4 hour. You can even just see the blue lines, man. Price played beautifully off those. Beautifully. I guess I just call them price trap lines. I don't know. Okay, huge channel we just broke out of. Okay, we know just looking at this one leg right here, our swing high will be here. Our swing low is going to be like right here. So if I drop to my 1 hour, swing low, definitely right here. Swing high, you could even say is right here if you wanted. So you have two locations. You could say it's here, right? Which is okay. That's not a problem. You could even say it's here if you're trying to match it to the 4 hour. Because now you know that this is one move for the 4 hour. Okay. And that helps you understand that if price even pulls back, that it's just price exhaustion and that we're only coming back to test this consolidation zone that we left or the supply zone that we left. Okay. So we know supply is right here. We know price just impulsively left supply. And what we want to see is price come back and mitigate. So I haven't talked a lot about mitigation on my channel, but mitigation is essentially when banks leave a supply or demand zone, they come back to close out on the positions that they were losing on. Okay. So this movement of price going sideways generally means market or money was being thrown not only for selling side, but buy side by banks and institutions, right? And what tends to happen is they have orders that are left on both sides. And I'm sure I've talked about this before, but they have orders that are left on both sides. And once price impulsively moves, that's them dumping money for price to go one way for them to collect contracts and leave people here that basically got caught in the consolidation. Just basically get away from them, wipe out everybody in the pools, collect money back here quickly. And now what they would do is, in order for them to make this a valid setup to continue, they'll mitigate. So because they had orders on both sides, if I'm selling, all my selling orders are in profit, right? And let's say at the same time, all my buy orders are in negative, they're in drawdown. They sell all this, they make all this money off the sales, close that out. They bring price back, right? And when price comes back, they start closing out all of those buy positions, okay? So what would happen if they started closing buy positions back here? Okay, so if price was buying, and they still had buy positions back here, and they started closing their buy positions, price would start losing momentum. They would start closing out all of these, okay? Start closing them, closing all of that, right? Closing all that and getting their money back, and then price would exhaust, probably break structure again, and then we'd get our entry to continue down. And this is where we collect the rest, right? So this movement of price coming and hitting this zone here, right? That's the mitigation. Okay, that's the mitigation because they were able to cut out or minimize how much they would have lost because if they would have closed their buys over here, they would have been at a much larger loss than closing it back here. Okay, so we as retail traders want to wait for their mitigation every single time, because if you wait for the mitigation every single time, you're always trading with the smart money. You're not trading into the wrong moves. Okay, so again, it's how you guys want to play it, and as you guys can clearly see, they're double bottoming right here. Okay, so the likelihood that they come back that far is very high. It's very high. So for me personally, I'm going to keep my swing high here. It won't always be the case all the time, but based off of just relativity, this is what I'm looking at as the best option. So crossing swing high, alert, okay. Let me know you're crossing swing low. Yeah, I'm sorry I'm getting this video up late, but definitely been more stagnant recently. I've just been trying to like think of more ideas to try to keep this channel lively, you know, and get more attraction to the page. So those, it's gonna come with time. I'm not trying to rush anything, but I just don't want it to be boring for you guys. Okay. So yeah, that is that. As far as, so now we can just keep this line out here too. I'll do that on purpose, just so that when and or if it does come back, I can find that position. And the other thing, right, because we know that price could potentially go lower, we always want to mark the pools of liquidity on the opposite end, right? So if it's me, look at the floors and the ceilings, right? Floors and the ceilings, okay? Floors and the ceilings. Small little liquidity pool here. Right, it's very tiny. You can even see it happen here again, right? They impulsively broke out, they came back, they mitigated their positions, right? Because they had all this ranging, then they took it away. So this was your demand zone. Once price left your demand zone, it came back and gave you the signal. You can just take it to the upside up to here, TP, right? It's all there. It's all there. It's just, can you see it real time? That's all that matters. Okay. I set this up. Remember, I always like to find double tops and double bottoms. Keep in mind, right? This was a range. Price broke out this range. Once it closed above this high, and then mitigated everything in here, went back up, broke this, and so on and so forth, right? This is another liquidity pool that broke out of, and then same stuff happened, right? As soon as they broke out, the mitigation didn't really happen for this buy until around here. This would have been your valid buy setup, okay? So again, we had the breakout of this zone. Price breaks out, retests it, and leaves immediately, right? When it leaves immediately and creates space like this, chances are we're gonna make that breathing move back and then find another setup. And this is where we can easily go down, right, and find our point of interest. So this was the last up candle before the down move that broke to start this swing high. So I'm gonna actually mark this as my point of interest, or at least it's one point of interest. Okay, and we got our last block, and then we got another one right here. Okay, so these are two zones, right? We can play it by ear off of those. Drops to 15 so I can make it more precise. Wow, there you go. There you go. Okay, so that way at least there's more precision to that. Same thing with this one here. Last up move before the down candle. So this is the last up movement. Same thing. All right, boom. Okay. Now we got two. Okay, we can get real filthy with this. Okay, and the reason why this is the last up move because this candle went up first before, or excuse me, it opened here, went up first before it came down and closed. That's the last up move. So yeah. Wow. And then sure enough, we just wait, right? And remember, the only reason why I'm doing this is because this trend is in favor to the downside. So now if I know the trend's in favor to the downside, we'll keep it that way until price breaks its own structure to the downside. This is our swing high, this is our swing low. Now we know we're going to be looking for price to be at a premium or a discount, okay? Now UJ. Now UJ hit me with the swerve both ways. Now, funny enough, UJ, I didn't know if it was gonna actually go up to fully buy, but when it did fail, that's when I knew it wasn't going to. At the same time, I didn't think that this trade was gonna completely play out to the downside the way it did. But when it passed my halfway line, there was more incentive to do it. I just didn't find a entry into, I didn't see a reason to sell into these impulsive candles, because again, I was thinking there was going to be a larger pullback sooner, but that was never the case. And honestly, quite frankly, this was your pullback. This was technically your whole pullback, right? Because this really came to test the liquidity zone that it left back here, right? So you had it build all this liquidity. Okay, I'm going to draw this line all the way out so you can just kind of see here how things played out. That was just a great money grab, just a great money grab. They were smart. But you know, if you can identify these pools, these consolidation zones, right, that'll elevate your game like crazy, man. It'll elevate your game like crazy. So right here, you can see this was kind of the consolidation zone, right? If you wanted, yeah, you could say this is the peak high of it, but I like to keep it in a nice little range, and just kind of where price double tops and creates the most touches essentially, right? If it goes over, it's okay. If I draw this outward, that was like the highest point price could have got before seeing potential sell signals. This is about the lowest point price could have touched before seeing sell signals. Price sold off when it broke out, completely left, right? Then it reversed, came back, right? They mitigated their positions, okay? Because there was some selling, there were some buyers that were in here that got trapped. They took all them buying positions out and then wiped all these people out that were buying back here, right? So me getting in late, the buy was cool, but for how long we didn't know. So that's why I didn't really take it up as high. I thought we'd at least get around here. Got close enough and then wipes me out. I think I had this at break even as well. This one I did close early. So when price even started closing above this, like you can just see this is a prime example of like using that 5 minute, or at least not using 5 minute, but using the midline to kind of determine what side price will fall on. So yeah, we'll go ahead and delete these, get it popping real quick. The blue lines. You guys will see those blue lines come back up. I like to use those while I'm real-time trading because it just helps me like keep track of what's happening on the session by session basis. And then that way I can determine, I basically can execute a lot better off that, because based off how the market's shifting within those lines and leaning towards my outline or leaning towards these bigger lines, that helps me figure out exactly what's going on. That's just me. Like everyone's so different with this trading stuff. Some people just need more room in between their stuff. Like it's all different. It's all different. So just find your niche, find what works for you and stick to that, because that's what's going to help you. Okay, so boom. I'm gonna go down to my daily. Oops, wait, actually, I'm messing up. Go back to my weekly real quick. So we can see here, and I like to zoom in to make sure it's really where it needs to be, right? Now I know this video is gonna be mad long, but it's a 2-in-1, so definitely bear with me. You guys are getting the full raw breakdown of everything. Again, I generally don't like to touch my charts unless I've already made the video of the week. Of course, back testing is totally different. Like if I'm gonna back test, I'm gonna back test. That's why I'd hope that I get my review videos up Friday so that I can do stuff like that on the weekend. Because again, if I don't review video before I take everything off, I don't have a review video for you guys. I could tell you the setups I took, yeah, but will y'all believe me? Who knows? That's a big reason why I just leave my setups up and, just leave everything and just play it by ear, because now you guys can see the before and after of every week. So if you see my review video, then you watch my review, or if you see my analysis video, then you watch my review video and you see how the markets played out. You're like, wow, like what he said in Sunday really did play out on Friday. So that's kind of how that works. But here we could just see, if I drop to the 4-hour, right, this is the trap of everything. Okay. So I doubt we're going to get back up here. And honestly, this is about to be a crazy selling. Oh man, This is gonna be a crazy sell-off. At least it should be. We'll see. It should be. There's no guarantees. This is just the first sign of a potential sell, right? We have the confirmation of a seller's market now. That's a very nice bearish engulfing. This could be a really, really good pullback move. Let's go to the weekly real quick. So keep in mind, we had a consolidation zone right here, right in this space. Okay. Price breaks out of it right there, right? And now we're back in a zone where it could potentially retest, right? So this is our current week, and price could, from what we started doing already, it opened right here. It's sold already. It's trying to buy right now, right? This is the first pump of the buy. We can check on the low frame to see if it's still trying to buy. If I'm looking at the daily, it looks like the daily's first move was a fake out for a buy. So it's safe to say we might start seeing sells sooner than later, right? And now if we go on to our 4 hour, we can see here price is exhausted. Okay, so our swing low right here is right there. Our swing high may be here, or it could be right here. Okay, so we'll go down to the 1 hour right here. Okay, so definitely our swing high is back up here, right? Because this was, we'll even say it's this. Actually, no, that's fine. This is actually it. Never mind. Because this was the peak high that led to this low breaking, right? So, and kind of like keep in mind, right? The reason why these are anchors is because you have to also think, if price does come back and breaks this high on this 4 hour, is that not a breakage structure? You see what I'm saying? So it's like that's a big reason why we do find those anchors on our 1 hour, because the anchors in reality are for the pivots of the 4 hour. So here, right, we can go down to the 1 hour. We can see price is kind of cooking up. So we had a consolidation zone right here. Price out here chefing. Oh God, hold on. Price is chefing. I would rather box this in, but I don't have. Shoot. Do I have? Okay. I guess that works, right? We can just replace this. This is not our order blocks thing anymore. But yeah, so this is our consolidation zone that we broke out of. Price left it with some impulsive behavior. Looks like it could retest, right? This looks like it can mitigate. It looked like this is where the range was happening. So if it's me, if price were to respect this, I'm looking at a potential buy setup here that may come to retest a supply zone back up here. Okay, so if I'm looking at it right, the supply zone, this is weird, right? But price was moving sideways during this phase of time. Okay, so I would honestly set this up as a supply zone. Okay, or AKA a liquidity pool. I'm only saying the terminology of what it actually is because people need to start understanding why it's important to identify those. Once you identify those, you'll know how you want to enter into the trade, right? So if I know this was a supply zone because price was moving sideways and price broke out, and now we know we're back in it, but price is rejecting, then this is a valid buy setup back into another supply zone here. This is a demand zone because price was moving sideways before it bought out and broke out. And now we're back in our demand zone. It's rejecting. We can go down to our 5. And you can just see the setups there. So you can repeat the same mechanics on all the frames, and then just make sure that you're timing everything right in a way that it makes sense. So honestly, I think that's gonna wrap up the video here. With the rest of everything, I'm just gonna be playing all of it by ear. Here's actually some good examples of me setting up the blue lines really quick, just so you guys have an idea of how I use those. So basically you can see here, all the foundation is there on these frames. And now that all the foundation is there, I like to just set the blue lines relative to the current price. So right here, current price is right here, right? If I look to my left, this is my most current previous high. Not my swing high, just my most current previous high. This just coincidentally aligns with my swing low, okay? So it's my current previous low relative to where price is, so that we're in a market, okay? And honestly, this would technically, this would be my mid-level, okay? So this is where I would know where price is either gonna fall to continue lower from here or from here. Because if the mid-level is here, right? And this is, we're coming up from our low, and this is where our previous high is. If this is the mid-level and we exceed the mid-level, but don't break past the highest level, that's still a valid sell. So this is a good way where like you can kind of time your entries a lot better, because even if you miss your entry here and you see the same type of signal here, you're not as scared to get in. You understand why it went just a little bit higher or just a little bit lower. So even this buy setup, right? It may need to buy up to here or maybe even higher, but it may go down first, right? So if it falls beneath this level at this hour close at 11 o'clock, then we'll understand why it's trailing down. If it trails down but doesn't break past this peak low, which is also our swing low, we know it's breaking structure, which means that now the 4-hour is lining up for those buys. Okay. So that's how we do that. That's how I use my blue lines. So I'm going to quick brief it through all of these. That was just an explanation of where I'm setting them. And you'll just see how it repeats over and over and over. Okay, so right here, that's gonna be the mid one for me. So this is relative to the current price, our highest previous highs here, previous lows there, and midpoint, right? It doesn't have to be perfect, right? You could even do like a midpoint right here, because after price breaks, sometimes it tests under where it just broke out of. So where support was now becomes resistance, right? Do it relative to that. Where support was now becomes resistance. Clearly it already broke past it. That's why it's like there's no point in having that there. But this could be more, or even this too, where support was could become could become resistance. Same idea. Okay. And we'll do it again here. So we're on the hour. And remember, I always do it on the hour frame. And the reason why is because not only is the hour frame good for your entries for your 1 hour, 4 hour daily, it's also good for your entries on your 15-minute and your 5-minute. So you have it both ways. Again, you shouldn't trade both styles, but you have it both ways. You can see both things happening at all times. So you have more clarity. But I honestly would use this just for entries. You can delete them after, or you can keep them there to understand what's happening with the strength of price. With this, let's actually put my mid-level here. Okay, so where support once was to push price back up, it now becomes resistance, right? So price comes up. Let's see if it respects the mid-level in there. So just notice how I'm squeezing the shit out of price, but every single line makes sense. There's a reason, right? Yep. Boom, 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 and boom, boom, boom. Okay, so now it's here. So peak low. This here, previous high. Honestly, I might make this might be the mid-level, to be honest. Do that. Keep it real simple. Real simple. So now we definitely know we already got 2 taps off the mid-level. Price wants to come back above here. We know now we're respecting that order block from earlier, right? Okay, just like so. And boom. So yeah, if I wanted to buy this, I'll wait just a little bit longer. Wait for some bullish engulfing candles, more more wicks, whatever, just to kind of give you more of a reason to get in. And also, this is just so early. It's just so early. It's such an undeveloped trade. Just the same way how like someone could have bought into this or like bought this late, thinking that hey, this is the test. It's like always wait for that second touch. Always wait for the second touch. Because if you would have waited for the second touch down here, you would have known it's not gonna come back up. So yeah. But yeah, that's gonna wrap it up. Thank you guys for coming through to watch. I hope you guys did get a good amount of info out of this that could be helpful for this week and your future weeks of trading. We'll come back on Friday and see how things go. And yeah, this time I'm gonna try to actually get the Friday review up on the day of. That's granted that I'm not busy. I don't think I'm gonna be working this weekend, so I should be all good. But I do know in the month of August, it's just gonna be a really grind heavy month for me because I also I did actually just get approved for a new apartment. So I'm actually super geeked about that because this is going to be my first place that I actually get to live on my own. So I'm going to be able to really just hone in on the content that I'm be creating on this channel. I'm going to be able to like do more lives and, just have a better curated space to give you guys the content necessary. And also my gaming channel, I'm going to go, just as much energy as that will be going into this will be going into that, because again, these are 2 passions that really drive me, just to kind of go on another day in this world, man. It's just so much stuff that goes on, but those 2 definitely are some that I find passionate. There's definitely other hobbies I'm gonna get into, but for now these are the 2 that I want to hone in on because I know they're going to help me build a platform and build something here to lead to those other hobbies and so on and so forth. So again, I appreciate you guys coming through. I hope you guys did enjoy the video and market breakdowns. You guys go out there, kill it this week. Have a great week. If anyone's doing a funded test, good luck. I hope you guys definitely find your breakthrough with that and get to a point where you see consistent profits through just your ability to decide and have the best judgment in your setups. So otherwise, if you guys just subscribe, share, like, comment for feedback, that will all be greatly appreciated. Much love, everybody. Peace out.